Jonathan Barratt is the MD of Commodity Broking Services and joins me now again from Sydney. Jonathan, many thanks indeed for joining me this morning. Gold heading higher, safe haven of course. When will it go above 2,000? The ultimate question.
Look, there's a lot of volatility, and really, John, I think you've got to see whether the actual news is worthy of the move to 2,000. I think that's what we're actually looking at. Whether or not the announcement on September 7th, whether or not Bernanke's comments on Thursday will all conclude that gold has the right to get to 2,000, I think that's the challenge. Will it get there? I think if it can take out 1920, then I think 2,000 will just act as a magnet, and then I think it'll just trade there.
Jonathan, it's the 11th year of a bull market, the gold price rising 34% this year alone. I mean, it's almost, do you think it's overvalued now or not?
Yeah. Look, I think there's more value coming back to the market. I think during that period you've actually seen the supply of the metal come into the market continuing to reduce. And I think that to me is one of the big issues, because whilst you're seeing supply contract, demand is actually increasing. Remember, since that period we've had the introduction of the ETF, so that's certainly drying up a lot of surplus. More people can get more access to it. So as a result of that, the whole dynamics of the market is changing, and we're just still trying to find out where the good balance is for it. I mean, you just only have to look at, as you mentioned, the 23rd of August, that was where our old highs. It's taken close to, 13, 14 days for us to trade back $200. So when you look at it from that perspective, there's still a massive appetite for it. And I think if it does take out this 1920, then I think it just draws on 2,000.
Are there any other commodities out there, for example, corn across the softs, that you see perhaps offering also very good opportunity now to buy into? Yeah, John, I do. I mean, when you look at some of the softs, I think the greatest and perhaps the one the most undervalued is actually cotton. You can certainly have a look at the cotton chart, because it's had an unbelievable move to the downside, and what we actually feel is that the cotton market is starting to look very cheap. So I think if a lot of traders are actually looking for something that sees that we have a low in place, then I'd certainly be driving to cotton. Major issues, I think, in terms of supply at the moment, and particularly with the drought in Central America, I think that's going to draw on the supply to the market. So when you look at the overall complex, I think cotton's probably one of my biggest picks for the next 6 to 12 months. I have to ask you about crude oil, obviously. Again, it's below $84 a barrel in New York trade. Clearly, demand from China, got inflation out on Friday from China. Demand-supply ratio is quite relevant here. But certainly, the oil price has fallen. Do you think that's a trend or just a temporary setback?
Look, I'd like to think that it's just a temporary setback, but I think if the price of oil continues to go lower, that's certainly going to alleviate concerns in terms of the economies using primary inputs. Traditionally, we see a balance level, or at the low end of the range for oil, at US $80 a barrel. And we have spoken before where if it drops below that 80, we actually view it as being cheap. So if anything here, I think if we do take out that US $80 a barrel, then she is set for a lot lower. But I do think that demand from China is certainly there, and I think that will placate issues of supply. Remember, once we get around this hurdle of what's happening in the US and in Europe, then there's still plenty of demand. But at the moment, the indicators are that commodity still can remain weak, and I think the chances are it'll test US 80, and a break of that possibly even lower.
Thanks for your time there this morning. Jonathan Barratt there, the MD of Commodity Broking Services, joining us from Sydney.